Hey everybody, this is Ryan Mallory, and I'm going to talk about tech stocks and which ones I'm looking at buying right now. We just had a 250-point decline in the S&P 500, and we just had more than a 1,200-point decline in the NASDAQ. That was about a 10% decline on the overall index. Tech stocks really got hit hard. You saw Apple take a major beating, Tesla get taken to the woodshed. So is there any stocks out there right now that are starting to shape up as a good buy, and is Apple one of them? We're going to get into that and more. Now remember, I do these stocks to buy at the beginning of each month typically. I did one in the beginning of July, I did one in the beginning of August, but I've held off until now doing one for September. Why? It's because in the beginning of the month, the stock market was extremely overvalued, overbought, and it was due for a correction. I couldn't really see putting a video out there saying, hey, buy these stocks right now, they're all trading at all-time highs, it's going to be a great opportunity. No. It's not, because they weren't a great opportunity, and the market proved as much when the NASDAQ decided to pull back 10%. But now that we've got a little bit of breathing room, maybe the selling's not done yet. But what you want to do is find the trade setups that has a nice balance of upside reward, because they've pulled back quite a bit, but they've also pulled back to some key support levels to where if the bounce fails, the market keeps pulling back and it brings tech back down with it again, that these stocks will quickly let you know whether or not you're going to be on the right side of the trade or the wrong side of the trade. The first one is NVDA. Huge pullback. I still like it. Yeah, it might be still actually overvalued, but if this market has put in a short-term bottom, then this is going to provide you some value because tech will likely lead the way. But you have this beautiful trend line off of the March lows, still not violated. A lot of tech stocks after this past week cannot say that. NVIDIA still can. Rising trend line off of the March lows, still intact. Held it together when it tested it at the lows of this sell-off, and it had a nice bounce thereafter of about 6%. The S&P 500 was up 2%. So it outperformed the S&P 500 by 3-1. Now what makes this kind of a nice trade setup is that if it breaks the recent lows, it's also going to break the rising trend line. So this rising trend line can work as almost like a trailing stop loss, that as long as the trend line remains intact, so does the stock itself. Now if it takes a push back up to the all-time highs, I think it would be a good idea to take some off the table. What's interesting about NVIDIA is nobody's really talked about it the same way they talked about Apple, the same way they talked about Tesla, and yet this stock has been on fire since the March lows. It has gone from under $200 a share almost to $600 a share. This stock has been incredible, so it's worth playing this bounce attempt. Now check out Adobe. This is my number 2 stock here. Really interesting because it has a nice triangle pattern, and this tech stock broke out of that triangle pattern back in August. It went way up, and then it had this massive pullback this past week. But what it did is it held the 50-day moving average, and it's also pulled back to the breakout level. I love these kinds of trade setups because oftentimes they will bounce again off of the breakout level that it previously broke through. If the stock fails, if the trade setup falls apart, then I'm going to go on the underside of that triangle and use that as my stop loss. But you have to remember that these market bounce plays, they may not last for very long. And sometimes these bounces are only a dead cat bounce that leads to much bigger downside. That's what we saw in the S&P 500 back in February and March, and that's the potential here. So even though I'm saying these are good trade setups, you got to use risk management. You got to put stop losses in, because if they don't work, you don't want to be a bag holder for everybody else. So my goal right now in the stock market with this big pullback that we've just had in the past week, it really pales in comparison to what we saw in February and March. So I'm not completely convinced that this sell-off is done and over with. However, the aggressiveness of the dip buyers in recent months suggests that it could completely ignore all of the bearishness that has been in the market for the past week and just rip to new all-time highs again. So you have two different scenarios here, and both of them are extreme, and both of them have to be respected. Hey, and before I get to my next trade setup, I want to encourage you to check out my YouTube channel membership. It's a new program that I launched. It won't take away from any of the 2 videos that I've been doing each week for you guys. Instead, this is just an added boost that in between these videos, you're going to get my personal watch lists updated twice a week. You're going to get the charts that I find the most intriguing. You're also going to get updates on all the FANG stocks from Facebook, Amazon, Apple, Netflix, Google, Microsoft, and Tesla. Not to mention the fact that you're going to get market updates twice a week outside of the normal market updates that I provide you for on the S&P 500, on the Russell, and on the NASDAQ, along with my own personal indicators that I use for timing market reversals. So check it out down below, click the join button, and it'll give you a lot more information. Now, Twitter has been highlighted a few times before, but it keeps setting up and I keep liking it. You have an inverse head and shoulders pattern. It broke out, it went up like 11 straight days, and then it's pulled back to that breakout level. That's what I like, because this is a long-term support level, very long-term support level. So if it continues to hold it and it can bounce just like the NVIDIA plays and just like the Adobe plays, you want to play off of that support, put your stop loss right below it, because if that support can't hold, I don't want to stay in this stock longer than I have to. I don't want to hold on to a losing trade. I want to lose quick and I want to win slowly. And what I mean by that is that I want to let my winners run. I want to stay in those trades as long as possible. My losing trades, I want to get out of those as fast as possible. I want to know as quick as possible whether or not I am going to be right or wrong on a stock, because there's no reason for staying in a losing trade longer than you have to. And I got a bonus stock for you here. How about Square, SQ? Again, similar trend line, holding the 50-day moving average. Even though it doesn't have much of a history with the 50-day moving average, nonetheless, it's held it the last 3 days, and it's holding this rising trend line. I think it's an overvalued stock, but it could be a good bounce play under the same circumstances that we used with Twitter, with NVDA, and with Adobe. If it breaks the recent lows, you get out of it. Because yes, just like with NVIDIA, this thing has had this monster run. It's gone from like $30 up to $170. Totally nuts. And it's hardly had a pullback. This is the first time we've really seen a significant pullback in the stock. I respect the downside that this stock could still have in it, because if the market decides to continue its sell-off, this thing's going possibly sub 100. So respect the risk in the trade, respect the potential for a bounce. You got to do it both ways. A little bit confusing, a little bit difficult. I get it. But that's the circumstances that we're in right now. Why is Apple not on the list? Well, for one, it's broken two different trend lines. It broke above the channel last month, and then it's pulled back, broke a short-term trend line off of the July lows, and then it's pulled back even further, going back into the channel, but it hasn't tested the bottom channel yet. So unlike a stock like NVIDIA, where it's actually testing that trend line off of the March lows, Apple has a little bit further to go here, so I would rather wait a little bit longer. That's why I didn't put it on the list, but I felt like it was still worth addressing, because it is the most significant stock in the stock market, and it deserves to be recognized as such and to be evaluated when you see these kinds of massive pullbacks in the stock itself. So for me, until it can test that rising trend line off of the March lows, which right now is around 105, there's going to be no trade for me on this stock. Like I said, until today, I hadn't initiated any new trades for over a week. And why is that? I like trading. I don't want to go a whole week without trading, but when the circumstances calls for it, it's worth doing. Because here's the thing, I could have gotten short on the market when it pulled back for a few days there, but in the process of doing so, I would have gone from being long to cash to short, and then when the market bounces, I have to go from short to cash to long. And as a result, that's a lot of transactions and I can miss the trade. So instead, because it was the first pullback, I said, I'm going to wait it out. I'm just going to sit back and cash, and then when the market decides to ultimately bounce, I'm going to get back long on it again. Now, the market may decide to take a dip back lower, and then if that's the case, I'll probably end up going back to cash or greatly reduce all my long exposures, depending on the depth of the pullback. But right now, I haven't gotten short because I don't want to get chopped up by the market right now. And I still think that the dip buyers are going to be very aggressive at this stage of the rally, because for 6 months now, buying the dip has worked every time. So they're not going to give it up just because of one pullback. They have to fail repeatedly for them to change the algorithms, for the Robinhood bros to give up. That's just the fact of the matter, because they've made a lot of profits up until this point without having to manage risk, and they want to hold on to the hope that that's going to be the case going forward. So if you're one of the Robinhood bros out there, know the risk. That's all I'm saying. I'm not trying to insult you or anything, but respect the risk, because if you're going to respect the risk, you'll do fine. Yes, you may take some losses along the way. We all do, but respect the risk. Know where to put your stop losses at. Know where, if the trade goes wrong, where you're going to get out at, just like I did with Square, NVIDIA, Adobe, and Twitter. You got to know where to get out at. And remember, when the stock market gets too easy, if you like this video, I encourage you to subscribe, like it, helps me out. You guys are amazing. I appreciate the comments that you guys provide below. Each week I try to answer every comment that I possibly can get my hands on. And I want to hear from you guys. What do you think about the tech stocks right now? Are you starting to look at other sectors besides tech? Do you think the tech rally is dead and over with? Let me know down in the comments below. Look forward to hearing from you. Thank you, and God bless.